This is the Daily Market Comment by Rafi Boyadjian and Maria Pachurkadis. Thanks for joining us at XM.com. Recession jitters were abound on Friday, even as markets got off to a steady start, following a few wobbles along the week. PMI indicators around the world painted a grim picture for services activity. But the ISM equivalent for the United States was in stark contrast, indicating a pickup in July. Today's payrolls numbers should shed some more light on the health of the world's largest economy and whether there's been any alarming deceleration in hiring by corporate America. An NFP print of around 250,000 would likely keep the Fed on its current hawkish path. Fed policymakers took to the airwaves this week to strongly push back against market expectations of rate cuts as early as 2023. Despite two jumbo-sized rate hikes, FOMC members see the terminal rate much higher. Worries that Fed tightening may go too far have already inverted parts of the U.S. yield curve. U.S. and global bond yields are now headed lower again after spiking midweek, when geopolitical tensions over Taiwan began to subside. This is what's likely supporting gold at the moment. The precious metal is eyeing the $1,800 per ounce level. But it remains to be seen if declining yields and lingering recession angst can propel gold above this key level. In the meantime, the deteriorating outlook is inflicting heavy losses on crude oil, even as supply remains very tight. WTI and Brent crude futures plunged to levels last seen before the Russia-Ukraine conflict on Thursday. Stocks were struggling for direction, however, on Friday, as fewer big names are scheduled to report their earnings, and investors are hoping to get better clarity on the strength of the U.S. labor market before deciding whether or not to continue with a recent buying spree. Wall Street ended Thursday mixed, and E-mini futures were similarly directionless today. The U.S. dollar advanced modestly against a basket of currencies, while the yen was a little firmer. The euro fell back marginally, and the pound was weaker against the dollar too. Sterling came under pressure on Thursday after the Bank of England hiked rates by the most since 1995, but predicted that the UK economy would enter a year-long recession in the fourth quarter. But some investors questioned if the Bank of England's forecasts were too gloomy, and the pound recovered back above $1.21. This is today's Daily Market Comment. Thanks for joining us at XM.com.